This point about ecosystem. Safaricom has developed a fantastic ecosystem, as we know. The recent yes, from a cost point of view, they continue to use the Safaricom app or ecosystem simply because of the value-added services it offers. The other point on cost, again, as Sila may elaborate, is we know Safaricom's competitors have been offering cheaper money transfer products, be it the banks or some of the other telcos, yet they haven't been able to gain significant market share. That again points to Safaricom's superior ecosystem.
Yeah, I think it sort of answered my question. My thoughts was, I was just wondering how aggressive the government would be with such a product. Sort of, they be like simply want to compete and probably legislatively try to push it to the. But at least those two examples probably answer what is happening on that front. I was just wondering what Kenyan government would do in that situation.
So perhaps not to repeat what Ronak had said, but we believe that the central bank's ultimate intention is financial inclusion and frictionless transactions. So if through CBDC or a combination of CBDC and other mobile money players, you're able to achieve higher financial inclusion and reduce friction between payment or money transfer transactions, then their ultimate objective is still achieved.
I just have to say this, not because I'm older than all these guys, probably double. I don't understand this rush with the digital currencies. Makes no sense because M-Pesa is a digital currency. It's not as if you're creating something new. Yes, you are. You're allowing the government to be able to. The beautiful thing about it is you go digital currencies, the government could be able to give each household, each mobile phone user their subsidy directly. But we already have digital currencies. I don't understand why these governments are running around telling everyone we're going to do something with the e-shilling. I mean, give me a break. Huh? I've got my M-Pesa. My M-Pesa is digital already, so you're late. I don't need you. What I do need you to do is tell M-Pesa to stop charging me for making P2P transfers. I certainly need it for my government in Airtel in Uganda and MTN Momo in case anybody's
Okay, thank you. My name is David Jaggi for DIVEX. I just want to hear from the experts the ongoing war between Ukraine and Russia. How is it likely to affect, food security in Eastern Africa? And maybe what can the region do to cushion itself from these shocks, given that it's already struggling with, a very terrible drought?
Ranak, you want to take that? Food security,
Yeah, sure. Look, from a food security perspective, I was looking at the data from the KNBS yesterday, and at least from Kenya's perspective, if you look at imports in the year 2000, wheat imports accounted for only about 3% of total imports. And even when you look at the trade between Russia, Ukraine, and Kenya, imports from Russia again roughly accounted Russia and Ukraine roughly accounted for less than 2%. So as such, Kenya, and I would like to believe the wider East African community is not as reliant on imports, specifically food imports from those two countries. So in that sense, there shouldn't be any significant shock. I think one of the, I guess, uh, pluses for East and Central Africa is that they're more or less self-reliant on their food supply. Maybe not on a country-specific, but from a regional perspective. So in that sense, I don't, from an external perspective, I don't think that should be that much of an impact. But like you rightly mentioned, the weather outlook doesn't look as favorable, and as we've seen in the past, that usually does have a knock-on effect on food security and prices. So that's something maybe to watch out for.
Yeah, just to add to that, I think, in Kenya, it will be a problem, obviously, because obviously you will have higher import costs. There's no doubt about it. But as Ronak said, the magnitude of it shouldn't be exaggerated. But But once again, there are solutions to that problem within East Africa, particularly Tanzania, for example, and sourcing foodstuffs from other parts of East Africa, like Uganda, for example. Or you guys can just learn how to eat matoke like us, and then you wouldn't have a problem. So we have no food security issues whatsoever in Uganda, for even in Rwanda. It's for the region. The region is very resilient. There are alternative food stocks that we can use. So I think for us it's less of a. It's much more of a shock for our brothers in Egypt, where they're very, very reliant on bread and wheat products. So as you go north in Africa, it becomes more and more of an issue.
Once again, thank you for doing this. My name is Ruben Chama for the Voice of America. I would like to hear from our experts. Can you shed more light on what our East African countries are doing to attract investors? Are you seeing better laws to protect businesses? Are you seeing efforts to address issues like corruption? And also, do you see a drop in unemployment in this region? And the second question is, with the joining of the DRC into the region, into the EAC, what can countries in East Africa like Kenya, Uganda, Tanzania, Rwanda expect out of the new membership of the EAC? The DRC, and also what can DRC also expect from these members? Does the EAC have? Does the EAC member countries have influence on good governance in DRC? Thank you.
Yeah, I can start. Hi, Ruben. Thank you for your question. Look, I think the East African community, obviously, if you look at it, is a very large market. I mean, it's over 100 million people. With the addition of DRC, you're basically looking at 200 million. So suddenly you have a very large pool of human capital, and that is attractive to investors. I think people are looking for regions where transport links are integrated, where they can set up factories, where they can invest, and where they can move their money in and out easily. So I think the EAC certainly is doing all of those things to attract investors. And I think this dovetails into your question around what DRC can give to the EAC, because now you have essentially the EAC now spreads from the Indian Ocean to the Atlantic Ocean. You are looking at countries that maybe have high human capital, like Kenya, and a vibrant capital market. And then you have countries such as DRC, which are large exporters of commodities, but don't have as a developed capital market. In fact, for example, they don't have a bond market or a stock market. So there's a lot of expertise that we can give, and there's a lot of resources, etc., that maybe Kenya can tap from DRC. And obviously there are pipelines now, whether it's from Uganda via Tanzania. I'm sure the Lake Albert side of DRC presumably has oil. Oil doesn't respect borders. So, there's just a lot of cooperation between those sides. On questions on corruption, look, I think that's like a never-ending question. I think in the end, you just want stronger institutions in the end. And I think if you have strong institutions, a strong judiciary, a strong legislator, then a lot of these problems will be ironed out because they're easier to fix. And I think when you have a large pool of investors, then the governments will see that 200 million people pulling in the same direction is extremely powerful. And you're seeing Ethiopia, for example, opening up. Safaricom's obviously gone in. There's a lot of headlines recently around the banks also going in. And for a country, the financial sector is always very sensitive because that's money and that's people's pockets. So I think as Ethiopia opens up, that's potentially another 100 million people that you're looking at. So at that point, you're essentially looking at a population larger than Nigeria. And that's a very powerful, or Bangladesh, or any large sort of frontier economies with large populations. So I think that's very powerful. I'll pass on to Kato to add.
Thanks, Modi. I think you touched on it's a really good question because one of my biggest problems with us in East Africa, jobs. There are no jobs. I mean, I think Kenya, you're less than 5 million formally employed people in a country of 50 million people. Let me put that in context. In Vietnam, you have about 100 million people, just shy of 100 million people. You have over 50 million people formally employed. You see? That's a totally different economy. We need to create formal employment. We cannot rely on the informal economy forever, especially if we want to really develop our financial services and our financial services systems. So I think, to be honest with you, my answer is in the past 20 years I've been doing this now, I haven't seen much improvement from our governments in creating employment. It's one thing that's really been very frustrating. We need more of a structured or planned economy type system, I think, whereby we specifically target areas of real employment. We've tried to just rely on agriculture, but those of you like myself who are farmers know that we're at the bottom of the food chain, and it's really tough, man. I've tried this thing for like 15 years. When you're just a guy selling milk, it's amazing how you just have very little ability to sustain employment, right? I subsidize my farm. My milk sales don't pay for workers, and that's something that's, so I'm sure most of you who have tried farming will appreciate my frustration. So thank you for that question. I think there's massive need for improvement. But I will say something on corporate governance, and Ronak can chime in. There has been a tremendous improvement over the last 10 years in corporate disclosure by the listed entities, really. They've done a massive job of improving access to management, transparency, quarterly reporting. So I think the stock exchange, the central bank, I think they've done a much better job over the years of providing more and more reliable data, which is obviously the basis upon which anyone wants to make an investment into our countries. And I think that needs to be applauded very well. But on corruption, I think Mali said it all, right? This is something that we need to all work on and keep working on. But hopefully with hopefully with the improved disclosure, that's also very important, particularly not just for listed entities, for non-listed entities. If they force that more, I think that will deal a lot with corruption. And obviously, the more important thing is you all, the power of the press. You know, as long as you guys are able to raise these issues, as Ruben has done right here, and comment on it, I think we can keep putting pressure on our governments to really address corruption. And by the way, Magufuli has shown us that it can change with one administration. So I have hope. I have hope. Veronica, maybe you want to talk about disclosure, but I think we've answered.
Yeah, no, just to very much reflect what you and Moadi said. Firstly, on corporate governance, you rightly indicated, it has tremendously improved, not just within the banking sector, but also when you look at some of the non-banks, we are seeing increasing cases of engagement with minorities, which is positive to say. But I think what has been very encouraging, and the NSC has to be applauded for leading these efforts, is the implementation of ESG regulations. As we know, in the last 12 or so months, they have come up with ESG guidance for all listed entities, and we are seeing those gradually being implemented by all the listed firms. So I think that's something that will be appreciated by global investors. But apart from that, just to echo some of the things that Moadi and Kato mentioned, in terms of attracting foreign investors, I guess the key over there is increasing integration. Providing one large market for investors, and we have seen that progressively improve over the years, and obviously with the introduction of DRC, that further enhances that. Further north, there's been a huge amount of investments that's gone onto the LabSet project, which opens up the Ethiopian market. So from a strategic point of view, Kenya is very well placed. And then I guess the final point I would like to make, and this covers a lot of what Sila looks at, is digitization and power. I think the one thing we Kenyans sort of do not appreciate enough, and I guess that's because the power goes off every time it starts raining a little. But one thing we don't appreciate is the abundance of power supply, which is not something that a lot of countries in West Africa can say. I mean, specifically looking at the largest economy in Nigeria, they're primarily reliant on diesel supply for more than 12 hours a day, whereas in the Kenyan government, yes, they have made some mistakes in terms of investments within that space, but by and large, they have invested quite substantially, and the power supply and generation has increased quite significantly over the last 10 or so years, which is important, especially if you're trying to set up a manufacturing business, a regional manufacturing business. And then the final one is obviously on the digitization side, where Safaricom has been a pioneer and continues to improve its ecosystem, continues to digitize the ecosystem, and we can all see the benefits of that, whether it's in terms of tax collections, payments, supply chain management, etc. So, overall, I think there's quite a few things happening for Kenya and the wider East African community.
My name is Indeja David. I write for Husoko. My question is on health, something that the region has pressed for the last 2 years, and now it's like most conversations are trying to move away from the health discussion. Rwanda just opened their borders. Kenya dropped the mask mandate with a few limitations, but vaccination rates, are we still out of the woods? Where are we going? Because we still understand there's a lot of investment being taken to that health aspect. Like for instance, Kenya had signs of also Rwanda trying to set up the factories, and I just want to have what's your perspectives within the region around these subject, COVID and any other kind of health situation?
Thank you for the question. I think if you look globally, COVID is certainly being seen as less of a pandemic and more endemic, more akin to something like a flu. And in fact, I think in some places you can see that flu and other diseases are quickly becoming more of a problem as they were previously. I think where clearly the world is dealing with it better. There's better therapeutics. There's just vaccination, of course. I think Africa clearly is still a laggard in vaccination, but that's probably through no fault of our own. There was a point where there was a shortage and there was a lack of vaccines coming this way, and other countries negotiated and maybe harder and paid more for vaccines, which they got. But it's encouraging that Moderna has obviously setting up a plant here. I think the other aspect of that, for me, that's actually quite interesting is actually beyond even COVID, because if you look into the literature on mRNA vaccines, now they're starting to look at harder diseases to deal with. For example, HIV, types of cancers. I mean, it's a new, completely different drug platform. So if we have someone who's at the cutting edge of disease control, if you want to call it that, or vaccination or research, I think it's extremely powerful for us. If Rwanda gets also a factory or a plant, I mean, that's really interesting. And also, I think it goes into some of the other earlier questions around attractiveness of investment. Once you start doing high-tech things, you start to create an ecosystem. So maybe if it's just bringing in active ingredients, but then suddenly maybe you need glass manufacturers for the vials. Maybe you need people who service the machines. Maybe you need cold storage. There's a whole value chain that we saw with COVID, when some vaccines need to be kept at very cold temperatures, and it was a bit of an issue at the start. So I think all of this stuff is interesting, and I think setting us up for the future, whatever else may come, I think Africa's realized that you certainly need to have vaccine manufacturing capability that is in your own control. So I think that's a powerful message that came from that. So I think what we're seeing at COVID, I think we're just going to follow what else is going on rest of the world. You know, restrictions are coming down. You just have to be vaccinated to get into a country, and it seems that's the way it's going. And I think we're just learning to live with it. I mean, look at us. We're in a room here, 99% without a mask, all comfortable, like we were 3 years ago. So it's nice to be able to do this event face to face. I mean, we used to do these things virtually, but it's so much more powerful when we're all together, you know, looking at each other, talking to each other. So Sila, maybe.
Yeah, thanks, Marty. I think I've captured most of it. Perhaps just to add, from an investment perspective, I think we're seeing investments or companies starting to appreciate the health tech ecosystem. So investments in, delivering healthcare access using digital channels, all the way from, whether it's accessing a hospital, getting your drugs delivered, and also access to health insurance. So I think that's really been the case. Overall, through COVID, you've seen accelerated adoption of digital technology across various economic sectors. And I think healthcare has been one of the beneficiaries of this, and the ability to then transform the industry by taking advantage of the new technologies that are available that create access for a larger proportion of the population going forward.
One thing I'll add, it's a very good question. And, I don't think enough has been done to look at the consequences of COVID. For example, mental health. A lot of people were forced to work out of their houses, which they had originally rented or bought as a place where they thought they would just go and sleep. Then all of a sudden you were working in your kitchen, you were working in your bedroom, you were working in very uncomfortable situations, and often people were alone in their houses and locked up. I think not enough has been done to try and address the consequences of COVID on mental health and physical health, because it's not as if you had the proper chairs in your house. I mean, the whole process actually was massive when you think about it. And I think corporations as a whole need to not think of it as something that's just happened and we're done with. There are lingering issues that come out of it. And so we even have sessions for people to discuss their problems or their issues during COVID. And we found that to be very, very helpful as a part of relieving one's stress, because sitting in your house the whole time was brutal.
Good morning. Kefam Wiroi, Citizen Digital. First, apologies, I was late, so I'm just gonna go into this blindly in terms of what I didn't get from before, and just ask from 3 topic calls. My first is around your take on foreign financing, especially for economies our size, noting that after COVID-19, we have a new, I won't call it a pandemic, but there's new volatility from the Russia-Ukraine conflict. And at the same time, we are seeing a normalization in interest rates from developed economies. I'm curious to know whether you expect then any future Eurobond issues by Kenya, at least in the near term, to come at a premium, given the dynamics of investors always shift to safer havens, and now the safer havens are more attractive given the raised interest rates, or what we expect to be raised interest rates, at least at the end of the year. My second one around the NSC, I'm curious to know, you had talked of how to improve activity. We've seen quite a number of interventions. I think it's a bit sad since my time on this business, I'm here to report on an IPO because there've been none, and I've been around for now quite a significant time. And someone joked last night saying that investors at the NSE have been buying the dip since 2015. And just taking that into perspective and seeing all interventions, we have derivatives, we now have day trading, we had the Ibuka program. 3 years in, there's no listing of it. The only one that came in the name of Homeboys, that seems like a frozen listing. I'm curious to know, I know we don't have a magic bullet or a booster shot, if I may use, in 2023, if I may go for the booster shot. What will it take to boost activity? Is it a matter of introducing new products? Is it a matter of working better with what we have already? It's been quite, there's been not much progress in terms of any new additions contributing to much in terms of increased activity. Like you said, it's still a foreign investor market in most part. And then on my final one, just to wrap them all up, the CBDC. I happened to join the discussion from the governor of the central bank with NTV last evening. And again, it's important to note that nothing is yet a foregone conclusion with that, with the CBDC. But for me, the 17% that are not still included in the financial system as going by the CBK FSD report, will CBDC be the cure? I mean, making the argument for those 17%. Interesting to note, I'm yet to have any open columns, but surely I know the 17%. It's not been a matter of tech. We have very many solutions into payments, and I'm just curious to know what, for you, do you see as the use case? The CBK has insisted perhaps it's about supporting cross-border payments. They are still high. They want to bring that to around 3% in terms of the total amount being remitted. But domestically, I still struggle to see a use case for the CBDC, especially in terms of bridging that gap. We are talking of, you well put it, it would be a 4G device perhaps, and a mobile-based application for CBDC. Going with what IBC is telling us, 11,000 polling stations do not even have 3G connectivity. And I'm just curious then, should we be in a rush, or is this a moonshot? Is the CBDC in Kenya a moonshot? Given that already for those in the payment space, whatever is there is working, and those not in it, the 17%, the CBDC for me wouldn't seem as a cure for it. Thank you.
I think a few of us can answer those questions. So, yeah. So let me start with NSE, and then I'll start on to Ronak on foreign financing. Yeah, all right. So I'll start with your second question on the NSE. You're right. There's been no IPOs. I think a lot of it is there's been a lot of crowding out by government. So a lot of local money going into pension funds, unit trusts, etc., has found itself buying bonds. And this, in a sense, has just made it less attractive to go to the capital markets. And the banks were also not lending, there were rate caps. So I think there were a few very specific issues to Kenya. I think also is just a question of, and I think this is a government policy thing, and probably above my pay grade, but you also have to make it attractive for companies to raise capital on the exchange. Because arguably it's probably cheaper to go pay an advisor a few percentage points to raise money on the exchange than it is to go get a bank loan at 13%. It should be part of your investment decision, whether you want to do debt or equity, and there should be at some point where equity is more attractive than debt. Now, I'm hopeful though, because if you look at the amount of investment that's happening in the venture and private equity space, at some point there are going to be exits. I mean, there are some large businesses that had private equity money that went in 4 or 5 years ago. And usually that's when they start looking for a sale or an exit of some sort. So, it's a question of now making the NSE attractive. Now, you've mentioned some listings that come from Ibuka. The problem is that, if you look at the local asset management business, because there's no retail in Kenya, we know this, and we're trying to fix that to be part of the solution, is that when you look at the institutional money managers in Kenya, they grow every day. All of us have unit trusts, or you may have a savings plan, etc., with one of these companies. There's money going in every month from your paycheck. So they're growing. So it's come to the point where they need large transactions in order for them to be attracted to them. The large transactions just haven't come. But I think government is also part of that problem. So government needs to also have a privatization um, agenda when we talk about it. I mean, I've been, talking amongst us. If you think about Safaricom, which has occupied a lot of our thought this morning, was listed right at the end of post-election violence. So when Kenya was really at its bottom, we listed the most valuable company in, I guess, Sub-Saharan Africa. I mean, there may be one other, there might be bigger. But, that takes a brave decision. So in a sense, I think that activity can be created. And at that time, it's gone. And at that time, you also had, so Equity Bank, which we've spoken about, listed by introduction of that around that just before, was just after actually. So there's a lot of activity, and retail was very excited. So I don't think it's dead. I think it just needs a few incentives to come back, and this will also then fuel the uptake of the new products. You see, because it's chicken and egg. If there's no if a stock isn't trading, then no one's ever going to take the other side of a derivative trade for you because they can't hedge themselves. It's all about risk management. So if you want to buy a call option or put option on a stock, if the bank that's selling you that option cannot hedge their position on the other side because the stock doesn't trade, then they will never sell it to you. It's like you having a market stall and you're selling apples. And if the farmer who's providing you the apples is constantly selling you apples with worms in them, you'll be very hesitant to sell those apples because your reputation might take it in the market. That's exactly what it is. So it's chicken and egg, and hopefully if we get retail going, then liquidity comes, then this uptake of these products starts to become a lot more interesting. And I think also that the costs of transactions have to come down. I think there's a lot of parties in any transactions on the stock exchange, from brokers to the government to the regulators, the depository, etc. If you want to encourage day trading, then you need to make it cheap, because if a stock has to move 4% for you to make money in day trading, then you need to be an insider and basically be doing illegal things in order for you to make money. So the product won't work. So that's part of it. And you can see it. Yesterday, equity released results. The stock didn't move 4% either way. So if you were day trading Equity Bank yesterday, even though the results were great and the dividend was great, you wouldn't have made money. So that's the problem. But I'll pass it on to Ronak to talk about some of this, the first question on foreign financing.
Yeah, global central banks are raising rates. If you look at the US Fed, which is a key parameter, they're expected to raise rates by anywhere between 5 to 7 times this year. So obviously, that, and obviously with the events in Russia and Ukraine, there's a bit of a risk of attitude as well towards what you'd call higher risk frontier assets. So yes, the environment is tightening up, but I don't think it's completely shut. If you, as an example, just last week, Nigeria raised Eurobond of around $1.25 billion. When you look at the press release, it seems like the issue was 3 or 4 times oversubscribed. The yield that they got was about 8.25, much higher than they used to. Historically, they used to raise it around 6.5%. So clearly, the yield curve has shifted upwards. But like I mentioned, the market isn't completely, and at a rate of 8, I still think it would take it. With that being said, when you look at Kenya's overall budget and debt management strategy, from what the finance minister is telling us and from what we get from the IMF, yes, they will continue to rely on external financing, but at the same time, they want to reduce the cost of external financing. So the strategy very much is to wean the country off this sort of commercial debt and become more reliant on bilateral type loans from the likes of World Bank, IMF, etc. So yeah, just to sum up, I think things are getting tougher, but I don't think it's completely shut. And also from Kenya's perspective, I think there are other venues that they can raise revenue from. For example, they raised the World Bank loan just a week or 2 weeks ago. I guess just to go into the other question. On the use cases for 17% that are out of the system, it remains to be seen. Obviously, cost is one factor, and lower costs should attract more users into the ecosystem. Safaricom has done well and continues to increase. Its penetration rate is distribution. As Sila will mention, Safaricom has a very wide distribution network across the country. It's a very well recognized and trusted brand. That also helps. So when the CBDC is eventually introduced, it's not just going to be a question of cost. There's also going to be a question of distribution. There's also going to be a question of the ecosystem itself. Is it just going to be a simple money transfer system with no other value-added services? In which case, again, the uptake that might reduce the uptake. But that being said, there are many other use cases for CBDCs, some of which Kato mentioned earlier. The introduction of a CBDC makes it easier for you to pay subsidies, or to try and stimulate the economy. CBDCs, also in theory should also be more efficient, because you're effectively eliminating the middleman, which is the card processors, etc. And it's supposed to be a system that works on 24 hours. So there are many use cases, but like I said, it's still at a very early stage. And even if you look at the data from China, it's still unsure in terms of how it's exactly going to pan out now.
I think it's covered. Perhaps just to simply answer, we agree with you and don't see the urgency in terms of bridging a gap, especially when you have an extensively used digital currency via M-Pesa.
Yeah, just to totally agree. I think I don't understand all the rush around these electronic currencies being issued by central banks. I don't think they're the solution at all. The solution is just make transfers and payments free. Make it easy for people to load their money into their wallets, make it cheap for them to make payments and transfer money to each other, and then you're done. There's no other thing you need to do, I think. But it does sound nice to have, all our governors, all of them are rushing to the table to say they have electronic currency, and half of them is like, who's this for? My mother just got over M-Pesa. Now you want to give her electronic currency, and there's so many people who wouldn't understand it anyway. So I don't think it's the solution.
Good morning. I believe it's still morning. I'm Ben Odwal from the East African Business Times. Mine is on the point of the war in Ukraine, and maybe the admission of DRC to the East African community. The question is on the East African community, or the market. The East African market has been identified as the next frontier for oil and gas and probably minerals. And with the war that that is happening in between Russia and Ukraine, we've witnessed a serious economic impact, probably because Russia apparently is a key producer in gas, and that has really affected a number of economies and all that. So while we look towards EAC as the next frontier for oil and gas, and then just some time back when the war was starting and the economies were being affected, some reports were released that the UK was now looking to the West as a key market for gas, if at all the war was to escalate, and then it affects now even the imports and all that. So when we say that the region is the next frontier for oil, gas, and probably minerals. Do you believe that much is being done to unlock maybe the opportunities? Now that we look at Tanzania, Tanzania is a key gas producer. We look at Kenya. Kenya, I think, made some few steps into the oil production market. You look at South Sudan. South Sudan has been trading in oil and for some time now. So do you think there maybe a lot is being done by the regional economies, probably to also make the region attractive for oil and gas, probably, so that countries do not just look to the West, but also focus on EAC as a key trading partner in this?
Yeah, that's a very interesting question. And you forgot to mention Uganda, by the way. We have oil coming in 2025. At least we pray. Look, the problem in Russia is really hard to solve in East Africa because of logistics. The guys who are benefiting are the alternative gas and oil suppliers in North Africa. Particularly, you've got Libya and Algeria. Those will be the primary beneficiaries of, in my opinion, of solutions for reliance on Russia, right? But certainly projects that were questionable maybe 2 years ago, as per the Tanzanian gas fields, and now obviously with current prices being reconsidered, we have pushed ahead even before oil spiked with our production. And certainly mineral mining in the DRC has never at any time stopped. And I think, yes, we will be primary beneficiaries of the higher commodity prices, which should help our region, really. Our region, again, that's why we at EFG are here, and I'm very excited to be here. It's because we think our region is actually, in fact, a net beneficiary because of the higher commodity prices. And, you have ways as an investor to get access to that through an equity bank. So is enough being done? Maybe more could be done, but these agreements take time, and it's always about managing one's self-interest as well. I think focusing on having, for example, on in-country refineries as oil is developed, and more will be developed in Lake Albert and on the DRC side, is going to be very, very important for our financial security. So I think the region can and should do more, but what they have done so far, I think I'm encouraged by. I don't know if you want to add anything.
Look, I think the only thing I would add to Kato is that, you're starting to see infrastructure come to play. Obviously Uganda has now gone ahead with the oil fields. There's a pipeline that will be built through to Tanzania. At current oil prices, even the fields in northern Kenya, the so-called string of pearls, suddenly become a lot more viable. As you know, that's a waxy oil, so the pipeline is a lot more expensive because it has to be heated. So I think there will be a lot more impetus on projects that maybe had fallen by the wayside. I think, as Kato says, obviously for Europe, they will find supplies much closer to home, and probably from larger LNG exporters. But certainly I think for Tanzania, Mozambique, if you think that their big competition was actually Australian LNG, and as East Asia maybe diversifies its own LNG imports, then there will be probably some space in the market for Tanzanian and Mozambican gas. And as you know, these gas trains each is like a $10 billion project, so they're absolutely massive projects, albeit the security situation in Mozambique, which seems to have settled down a little bit. So I think projects and exploration and prospects that weren't economical at a $40, $50 oil price are now much better at $100. So I think you'll certainly see that, and the governments will start to think about how to protect themselves. And there's a refinery in Uganda that's going to be built as well. So certainly that will help with the regional demand for refined products.
Graham from the Standard. My the first and the second question probably will be a follow-up on NSC, which is just a short question. What exactly can be done to increase the participation of retailers in stock market? And I know Ronald mentioned the issue to do with foreign funding, and in the medium term, see National Treasury plans to reduce borrowing or deficit by about 5% in the next, I think, 5 years. I understand that CBK at the same time has looked into, there was a request by Equity. So at the moment, Equity can actually do risk-based lending, which to include a lot of businesses or individuals who had been left out due to the capping of interest rate. Now it's almost 20%. I'm trying to juxtapose the issue to do with government reducing foreign borrowing and looking into borrowing locally, with now CBK opening up to banking institutions to actually do risk-based lending. How will the appetite probably for both the government and the private sector be in the next 5 years?
Thanks, Graham. I'll answer the question on NSC and I'll hand over to Ronak on the other. Actually, it's a very simple thing. Margin lending. That is going to be part of the solution. I think it's probably the magic bullet. And the reason I say that is when you start to give margin, then you allow people to use a small amount of money to basically, make a bet that something's going to have a large move. And it means that then the scale of those increase and more people can access these products and more people can participate in the market. I think in every market where we see very, very large retail participation, and Vietnam is actually a very good example because Vietnam is probably 90% retail and is trading $1 billion a day. Kenya is trading, yesterday was a good day and I think we did 600 million shillings. So, just to put it in perspective, there's a big, big gulf. And Vietnam, to a large extent, is powered by margin. Now, what it does produce is volatility, and volatility is not bad because if you have stock prices moving up and down, then price discovery happens more regularly, and it means that there's more opportunities to buy something if you think it's cheap, and there's more opportunities to sell something if you think is expensive, which means that you're in the market more often, which means that you're trading more often, volumes go up, and then the market looks more attractive to issuers because they say, well, people will pile into these stocks and they will do this. So across Asia, I think you can certainly see the power of retail, whether it's Indonesia, whether it's the Philippines, whether it's Vietnam, Bangladesh, Pakistan, closer to home, Egypt. EFG has a very large retail business in Egypt and other parts of the Middle East, and that's a sort of product that we want to bring here. And we also offer margin in those markets, and that's an important part of the retail proposition. So I think sometimes it seems like a bit of a dirty word in Kenya, but it really isn't. It's actually a facilitator. Because it's like, if you don't get a mortgage, if mortgage rates are not affordable to people, then no one will ever buy homes. And no home ownership will never go up. So at some point, you have to allow people to be able to take some sort of lending to participate in the market. I hope that answers your question on the retail side, yeah. And then Ronak?
Yeah, thanks, MK. No, interesting question on debt appetite and what we're seeing from the risk pricing side as well. So look, firstly, as you rightly mentioned, the finance minister has committed himself to reducing the budget deficit. And if in any economy, the key primary tools for sort of stimulating the economy, it's either on the fiscal side or on the monetary side. In the last 6 or 7 years, as we know, the fiscal policy has been extremely expansionary, but given where the debt levels are, it seems like the government is now starting to rein that in. So what we need to do is monetary policy or credit growth to pick up. As I mentioned earlier, credit growth since 2015 has been pretty moribund, but but with the introduction of risk pricing models and the economic recovery, we do expect credit growth should accelerate. Now, the question of what that means from a debt appetite. Um, I think the appetite for debt will still be there. If you look at the holders of domestic debt, around 50% of it is owned by banks, and then a large proportion of the remainder is owned by institutional investors. Now, institutional investors, if you look at their asset allocations, roughly their equity allocations have ranged from around 20 to 25%. We currently think they're currently at the lower end at around 20%. We hope with improved earnings performance by the NSE companies that equity allocation will increase. But even if it were to significantly increase and it goes to 25%, it still means there's another 75% that they need to invest in other assets. And in Kenya, given the lack of other investment options, a majority of those funds will eventually end up in government bonds. So there's going to be large backing from the institutional investors, the pension fund managers, insurance companies, etc. Turning to the banks, as you rightly mentioned, over the last few years they have built up their treasury positions because they were potentially not lending as much as they could. But even when I scan through the financials of the larger banks, with the exception of Equity Bank, the loan to deposit ratios for all the other banks still remain relatively high at around 80%, if not slightly higher. So I think going forward, what you're going to see is taking Equity Bank aside, the other banks I don't think are going to be in a position to sell down their treasury positions and grow their private sector credit portfolio. I think what you're going to see is these banks become a bit more aggressive on the deposit side, which will then be channeled into private sector lending. But even then, a proportion of that will still be directed towards government securities, simply for the purpose of liquidity management and day-to-day cash management purposes. So I don't think that the debt appetite will significantly change despite the approval of the RPMs.
Yeah, just a commercial plug for us. I hope all of you today leave and download our EFG1 app and tell everybody to download it, and that will help retail. Because it's not intimidating. You can actually do it. It doesn't take long, and you can actually put 5,000 shillings, and you can start trading. So it's actually, hopefully this could be the beginning of something very interesting, where people are more, at ease with making their first investment in the stock exchange. So please download our app, EFG Hermes One, and we'll be very happy if you have any issues or any problems or with demonstrations you need. We have a retail team that can demonstrate.
Yes. Any final questions?
Graham, again, of recent, there's been a lot of, I don't know how to put it, pressure, I would say, for a lot of businesses in the country and also globally in issues to deal with ESG, environment, sustainability. If I can give an example, just 2 or 3 days ago, Carrefour had gave some directive that they'll be buying, I don't know, eggs from hens which have been, the hens should not, they should be treated in a humane way as part of the line in businesses. In the banking sector, we've seen banks like KCB. I think it's the only one in the country which is doing green loans. I would like to understand from the global perspective how this pressure is coming from and how it's affecting businesses, especially now that we are seeing even smaller businesses, they're trying to fit into the sustainability agenda. how would you explain this phenomenon, which probably in the last decade it wasn't that vibrant, but of recent, it's becoming more and more like a requirement for almost each and every business to have that line of doing business.
ESG is tremendously important. Ronak will talk about the banks, but in general, and sustainability, in general, it's because I think it's become so important because of what we all see and live every day, right? I don't think any of us does not recognize that there's significant climate change happening. You know, I still can't believe people who don't recognize this. We're having very irregular weather patterns, and the sustainability of our ecosystem is really fragile, particularly when you put on board the massive growth in population. So we're still having very strong population growth, and we're having less and less arable land, and I think it's putting a lot of pressure on our ecosystem, as I mentioned. So the need for sustainable development has never been more acute, and I think it's only in the interest of all of us at the household level to the corporate level to think about recycling. These are things that you never used to really bother about. I think we used to just throw our garbage somewhere and burn it, right? But nowadays you have to actually think about recycling, and it's very, very important. And every business that we look at, we always look to see what they're doing in terms of ESG. And I think it's not just KCB. All the banks are taking this very, very, very seriously. Maybe the green loans, but I'll let Ronak talk about the green loans. But all the banks we talk to have dedicated ESG teams that look towards sustainable development. So I'll pass over to Ronak at this point.
Sure. Just to add a couple of points, you know, KCB, like you mentioned, has been at the forefront of implementing ESG initiatives. And they're in the process of issuing a green bond. But like Kato mentioned, you know, this isn't just a KCB specific issue. We are seeing ESG initiatives across the industry and pretty much across the listed firms, because as I mentioned earlier, this is something, this is a key KPI that the NSE has now introduced and is encouraging all the listed participants to adopt. And increasingly, like Kato mentioned, you know, ESG initiatives are quite competitive. You know, from a capital perspective as well, I think that's becoming an important consideration for banks and for you know, for listed firms in general. I'm not sure if that answers the question.
Yes, he says yes.
Thank you very much. I think we've come to a close. This is such an insightful and great session. Should you need any additional information, please let us know. EFG team, thank you very much. We are open in case you need any additional clarification. In case you need any interviews on the side, do let us know. We'll be more than happy to organize it for you. Thank you, and do enjoy your afternoon.
Thank you.
Thank you.
The recording has stopped.